and explain to you the background to the actions taken by the central bank, where we are today, and how we see the banks going forward. To also listen to you and to assure you that we have a very optimistic view of the economy and of the market, and that we hope we'll work together with the council and management of the stock exchange to find a solution to the problems that the economy is facing at the moment. It is important to bear in mind, obviously, that we do have a financial problem, an economic problem. It's not as bad as the rest of the world. The economy is still growing, but there will be short-term difficulties. However, the medium to long-term outlook remains very positive. My presentation is in 3 parts. There is an introduction, a process overview, and a conclusion. Now, the background. The global financial crisis has been felt in Nigeria through low oil prices, a slump in capital inflows, pressure on foreign exchange reserves, amongst others. There was gross mismanagement and governance failure created an asset quality and a liquidity problem among banks, exposing weaknesses in certain specific banks. Now, previously in this country, bank distress was resolved by license revocation, followed by bank failures, leading to losses to depositors and shareholders. And I think it's extremely important for us to bear this in mind. We had institutions that were failing. What would have been done previously was to hand them over to NDIC and liquidate them. What the central bank has done this time is to be proactive and anticipatory, representing a step change in ongoing institutional reform efforts. Our overriding objective in embarking upon reform of the banking sector is to promote a banking system that is sound, stable, and efficient. And this ensures a solid foundation for promoting sustainable economic activity. We aim to do this by ensuring sound governance and management, adequate liquidity, and robust capital adequacy. As we'll see in the presentation, the 5 banks in which we intervened had a combination of all 3. It wasn't just a case of being short of capital, in which case you would just put in capital or give them time to increase their capital. It wasn't just a case of a liquidity problem, in which case you give them liquidity support. It was a combination of a lack of capital, a lack of liquidity, and a lack of governance. And therefore, the institutions were adjudged to be in a grave situation. Capitalization, then as they say, when the industry sneezes, the rest of the market catches a cold. Improved governance, disclosure, transparency, and asset quality are critical to the long-term growth and resilience of the capital markets. And we keep emphasizing this because people say these actions may shake confidence. In fact, these actions are the actions that will restore confidence. Because confidence is restored when you have transparency, when you have disclosure, when you have ethics, and when you have professionalism. The capital markets continue to play a major role in banking reform, and the actions we've taken have provided a platform for the restoration of confidence and are in the interest of the sustainability and growth of the capital markets. Our priority as central bank in all our actions, following our mandate naturally, will be to safeguard the interests of depositors and creditors. But having said that, all stakeholders, including shareholders, will be treated in a fair and transparent manner. The central bank will achieve its objectives by acting within the boundaries of the Nigerian laws. No action will be taken without having been reviewed and considered, without reviewing and considering all the options available. And we intend to reform the banking system in order to prevent a similar crisis from occurring in the future. Now, what were the stress signals? The second option is the Japanese option, and we all know what happened in Japan in 1989-1990. They had an asset bubble, the bubble burst, the banks did not take the loss, and Japan remained in recession for 20 years. Because whether or not we like it, if it's a loss, there's a hole in the balance sheet, there's a hole in the balance sheet. It's bad news, but the earlier you recognize that this is the bad news, come out of the worst case scenario, the better for the system and the more quickly we can come out. This is why the US is coming out of recession now. This is why Europe is coming out. They took the hit in October. And if we'd done this in October or November, we'll be talking about a different story today. Hopefully, we'll turn around quickly. There were large concentrations in the capital market and oil and gas portfolio. These banks accounted for about 50% of total exposure to the industry. So if we're expecting margin loans at about $1 trillion, we found 450 billion in these 5 banks out of 24. The failure to meet minimum liquidity and capital adequacy ratios of 25% and 10% respectively. For banks to get to just the 10% minimum, they required an injection of 205 billion naira. And obviously we had to put in a little bit more money so that there would be a buffer and they could continue operating as going concerns. What would happen is that the big banks would have brought a number of second-tier, third-tier banks into crisis because they had the clout to take away their market. They could offer higher rates of interest and they had the connections to take away the customers. Now, there were options available to us at that time, such as suspending or revoking the license, handing the banks over to the NDIC, winding up the institutions and liquidating them, or setting up a bridge bank and doing purchase and assumption. A number of these options have been done in this market. At the end of the day, the depositors suffer, the creditors suffer, the shareholders suffer, and the people who ran the institutions into the ground and those who borrowed money and refused to pay get away. Now, we decided that this time the tables would turn, and we injected 420 billion naira into the 5 banks, replaced the chief executives and EDs of the 5 banks with competent managers with experience and integrity. You know all the 5. We reaffirmed the guarantee of local interbank market to ensure continued liquidity for all banks. We guaranteed foreign creditors and correspondent banks credit lines to ensure confidence and maintain important correspondent banking relationships. Ladies and gentlemen, don't believe any newspaper that tells you banks are shutting down lines. Not a single correspondent bank has shut its lines to a Nigerian bank. That has made it very clear that our priority at this moment is to ensure that those banks are safe and sound and strong. And then ultimately, we can go to the next stage later. The Nigerian banking system remains safe and sound. Our proactive anticipatory actions represent a step change in ongoing institutional reform efforts, including increased regulatory oversight and a review of disclosure requirements. We expect the banks to be rehabilitated in the most appropriate and timely manner. The central bank recognizes the importance of the capital markets in supporting the banking sector and fueling economic growth. I'm going to avoid making a specific promise, but I can assure you that returning liquidity to this market and easing the problems facing stockbrokers are integral to any plans we have for economic growth. Issues come up. Some issues are dealt with routinely. Some problems could be minor. A bank can have a capital adequacy problem. You give them a few months to go and raise capital. A bank can have a liquidity problem. You give them liquidity support. A bank may have had some minor governance issues. You apply the sanctions and correct that. Sometimes you find a bank that has corporate governance, capital adequacy, liquidity problems, and you then realize that there is need for a more drastic operation. 3 CEOs, 5 CEOs, 1 CEO, I don't know. I don't know. I don't think that we are going to have anything like what you call a tsunami again. Okay, but even if I knew today, I'm not going to announce it until it's ready. Okay, so let us just wait until October and we'll know. Now, on the confusion on the numbers, because we're sending 10 examiners to every bank, we cannot go to more than 10, 11 banks at most. What I said to you was that we're working on 10, After the 10, we had started working on the next 11. In fact, I would say 12 now. And today, Wednesday, we've sent out teams to the last 2. So the reality is by end of September, we would have finished the 14. So the confusion between 11 and 14 is not that 3 banks have gone under, please. It is that we were doing 11 and that we had 3 more to go. And those 3, I think, will be all done by end of September. And we'll go through the process. And there's nothing to... It will happen. I mean, August 14th, nobody knew it would happen. It happens, you know, and it has gone. You know? What will happen? But the reality is, the news going forward is much, much better than the news that is past. That much I can say. Regulators all over the world have looked at themselves and said, we messed up. Okay? And I think for us in Central Bank, what we have done is to look at ourselves and say, yes, we messed up. Okay? And we expect everybody else who messed up to say we messed up. Okay? And then the question is, okay, so we messed up. In what way did we mess up? Some of the things have been discussed. Okay? A lot of the problems with banks, for instance, happened out of subsidiaries that were not regulated by the central bank. So there's a big question. Should you allow a bank to own a subsidiary and then not be interested in what the subsidiary does? Which brings the question of consolidated supervision. It brings the question of greater cooperation, greater flow of information between the central bank and other regulatory bodies. It brings to the fore the question of the role of the Regulatory Consultative Commission that is there in the structure, which should be revitalized so that we all know. The capital market knows what's happening with the banks, central bank knows what's happening in the capital market, and we actually have an input into how these institutions are regulated. I think these are all learning points for us as regulators. They are learning points for operators, and we'll continue to do whatever we need to do in terms of that. So microfinance banks, the major problem we have is the number. As I speak to you, we have consultants that are in Ghana looking at the Ghanaian model, where they've outsourced the supervision of microfinance banks because monitoring is a problem. To be honest, monitoring 24 banks is enough, especially in this time. Now to start monitoring 800, I simply don't have enough people to do that. So while we have the microfinance banks, we have to design, again, it's all part of the regulatory architecture. We have to design an appropriate architecture for monitoring them. If it means outsourcing, if it means using audit firms, that is being looked at and we'll get a response. The questions that I have from the DG, time horizon. Okay, time horizon for turnaround management. The CEOs are CEOs, they're not interim. Okay? They're not there with a temporary mindset, they're there to run the institutions. Now, in the course, as the institutions turn around, and as we don't know what the future, 6 months, 9 months, I don't know, we find people who are willing to capitalize the institutions, we go through the process, we do it. They want the MDs to remain, fine. The MDs want to go, they bring in new MDs, I don't know. So I would rather say the focus is on getting the institution working than to set a timeline of 3 months or 5 months today. If it takes Union Bank 3 months to be ready for the market, it comes to the market. And secondly, the option is not just acquisition. Remember, there's also a capital markets approach. It could be just a rights issue. It could be a public offer if the market is there. If there's debt, that's it. Pronouncements on stockbrokers loan, I've already answered that. It's between the bank and the stockbroker. I cannot tell a bank don't recover, and at the same time beat up on the bank, you know, on losses. But having said that, I think that agreements should be respected as much as practical.